so many people get into the market, but they have no plan to get out. And you can't assume that everything goes up. And if you hold them long enough, they'll come around and you'll eventually make money, because there are a lot of stocks that go down and then they actually disappear, or they just don't underperform. And if you bring up the example of Cisco, CSCO, a monthly chart, great company, but if you bought this back, well, you can't even see it on your chart. Oh, there you go. Okay. If you bought this, I mean, this is one of the greatest stocks of all time. If you bought that anywhere in that 2000, 1999 area, you would still be underwater, because I guess I looked at the stock hit a high of 82 in March of 2000, and it's currently at 55.83. So here's a stock where if you just said, well, I'm buying blue chips, I'm just going to buy and hold, well, for inflation, you're probably down a lot more than those 20 points or so. So you have to separate out of your mind between a great company and a great stock. Right now, you could say Cisco, it's one of the biggest companies in the world. It's had great technology, great company, probably great to work for, but it's not a good stock. Maybe now it's getting a little bit better, but it's 21 years of no performance is not something you want to be in. And that's why you want a sell plan. You also look at Microsoft too. Great company, had one of the greatest performances up through 2000. This stock for 16 years went sideways, then reinvented itself, went more to the cloud, and has had a great run after that. So if a stock is not behaving well, and it's underperforming, move your money to something where it is, and maybe keep an eye on that stock, and then eventually you can come back to it. So anyway, and then there's, just even this year, there've been so many stocks that have had big moves up, big moves down. I saw Groupon went from 64 to 24. And yeah, you can just bring up the G.
That is ticker GRPN.
There you go. Yeah. So maybe you had a great move earlier in the year and it popped up, but you have to have some kind of sell plan, because you just don't want this to happen to you. Or Virgin Galactic, SPCE, that's had 2 declines of 50% in the last year.
Yeah, so, boom and bust.
Yeah. So anyway, so then, okay, so I was looking through Bill's book, and he said the whole secret to winning in the stock market is to lose the least amount possible when you're not right. And, and there have been many years when I've had probably more losers than winners, but I kept my losses so small that I had a number of really big winners that made up for all those small losses. So don't get upset if you don't, all your stocks don't go up, or if you're picking 50% of your stocks that are making nice moves or moving higher and you're making money, you're doing a great job. But you can still, I think he cited the example that he only had 33% winners one year, and he still had a very, very good year. And the more I've been in the markets, and I've seen how, even when I was running my hedge fund, that the hedge fund managers that blew up took too much risk and also did not cut their losses. And that's a key, is controlling your risk in the market. Where in every stock that you own right now are you going to get out? And it's something you have to keep in mind, and it's something that you have to set and stick to. So to me, there's 3 components of selling. The first one is buying right and setting your initial stop. The second is selling into strength, and the third is selling weakness, when the stock doesn't work out or you have a move up and then it starts weakening. So when I'm considering buying a stock, I'm always first checking the chart. The chart comes first to see where I'm going to sell before I get in. Where if I'm wrong, it's I'm out of there. And the tightest patterns, and I've been talking usually when I'm looking for those 3-week tight right near the high of the stock. And let's go to an example of here's a stock that I bought yesterday, IQV. And look, okay, so let me bring this up on my chart. So on IQV, very, very, very tight formation. Stock broke there out at 254.05. And so where did I set my stop on this stock? I did not set it at 8%. Because the chart is telling me it's gotten so tight that where will this have a problem, or where will I start saying, hey, this does not, it's not acting well, I should get out. So on this stock, so my stop is at 243.68, because that is right below the low of 4 days ago, 3 or 4 days ago. That's where my stop is, because that stock is so tight. If it does not break out of there and keep on going and move higher quickly, that's where my sell stop is, and that's at 4%. You don't have to sell all your stocks. You don't have to wait till 8%. Bill used an 8% rule, and it's a great rule. But if you have the technical formation that's set, it can give you places to get out even earlier. The other thing you can do, I mean, you don't have to sell it. Let's say you really like the company and you just think it's the market that hit this stock down. Well, what you can do is maybe sell 4%, half of it at 4% if it goes through that. Keep the other half. And if it goes through your 8% stop, then your average would be 6%. So you can do it that way. It doesn't have to be an all or nothing. The first sign of weakness on this, or the first sign of something that might not be working out, is if it comes back down into that base at 250. And if it does that, then I'm going to be going, uh-oh, that's not good. A few things that have already happened, which I'm not that excited about, is the volume wasn't very high yesterday. Didn't get to average daily volume. That's one mark against it. I've got a small position. I didn't load up. I bought my initial 5% position in the stock. I haven't added to it. I'm waiting for a follow through. Today it's off. It's down 67 cents, but we'll see if it follows through. So that's an idea. That's where buying right, if you're buying at a really nice tight base, you're not buying extended, it makes it so much easier to sell it. Then I'll show you something that did not work out. And if anybody else has any comments on this stock or what I'm talking about, or want to add to this, go right ahead.
Do you use hard stops, or I mean, do you put in stop orders, or do you just put in alerts? How do you handle that yourself?
Well, if I'm not going to be sitting here watching, and most of the time I'm here from 6:30 till 1, then I don't have a hard stop. But if I have to leave, I have an appointment or something, then and it's getting close, I'll put in a hard stop. Because I don't want to come back and see this
be
thing
surprised.
Yeah, go, oh my gosh, what happened? So anyway, here's if we go to Capri Holdings, CPRI. Now, this is one I thought was setting up fairly well. It had a great earnings report. And if you see 2 quarters in a row, very, very strong earnings. It came up to that 60 area, and it looked like it was building a fairly tight little handle. That was about a week. Now, maybe it should have been longer. And so I bought the stock as it was coming up and through 60. And so what did I do? So I bought it 60.18. The stock did not follow through, and it came back down into the base. That's never a good sign. And it didn't break out on volume. I mean, I started buying it earlier in the day and the volume didn't come through again. And then on Friday, it came right back into the base. And so technically that was not what I wanted to see happen. And so I sold half the position at that point, and then I sold the rest at yesterday at 58.50. An 8% stop would have gotten me out at 55.36. So it really hasn't gotten there, but this is not acting well. I mean, it breaks out on low volume. It comes back into the base on bigger volume, and it's gapping down today. So the combination of those things. Now, that's where buying at a nice tight technical spot gives you an earlier out on your stock, and can keep your losses smaller than that 8% rule. Now remember that 8% rule too that Bill has said, that's off your initial purchase.
Right.
That's not after the stock has made a nice move, and we'll get into that next week. But when you're initially buying your stock, if you're buying it in a nice tight spot, you have technically a lower risk point to get out of that stock. So those, then here's PKI. I mentioned this in the past, PerkinElmer. Now this is another one, really nice tight base. And so buying it at 157.53, where would my stop be? Well, it would be right below where that 21-day moving average is, and that's not nearly 8% on that stock. And so here's one that had this is the proper breakout. The volume's increasing. You got 6, 7, 8 days in a row up. And so now I move my stop up, and maybe we'll get more into that next week. But that's why I'm always looking for 2 weeks, 3 weeks tight. And once you get that, it gives you a much better sell point. So
great. Thank you so much. Justin, any words from you on what we just reviewed?
So just David, as a follow-up, going back to Capri, what is the difference between, in this case, and one of the things that I think is another flaw here is that the NASDAQ is kind of at highs for the day, and this is still at lows for the day. So in addition to that gap down that you mentioned, but what would you say is the difference between this maybe forming a handle here versus a failed breakout?
Well, it's going to have to start forming that handle pretty quickly. It's got
to stop.
Yeah, it better hold right now, and then just start bouncing back between mid 50s and 60, and setting up again. Because a gap down, and I guess the volume's up 27%. It just has to start holding, because it gapped up. It seemed to sit in there tight for over a week and started to go, but there was no volume, there was no follow through, and that's and then technically it started. That's why I started selling it. It pulled back into that base.
Yeah, and it didn't do what you expected. And then also just going back to the Cisco example, the monthly, and again, it was really, really tough on this because the internet was still so hot, and networking was such a big thing and everything like that. And this is one of those stocks that buy on the dip mentality was so strong. People were just saying, look, all you have to do is buy on the dip, and Cisco always comes back. But I just wanted to point out to people that this went all the way down from that 82 high down to 8. And so the other thing about when you're talking about holding one of these leaders for a long time and how it still hasn't gotten back to its highs, you also had to suffer a 90% drop on this, and so there again, why would you give up that much in order for the hope of something coming back? So just again, if you can, I think, David, you've said this a number of times, where it's not about getting out at the top, but if you can get within 10%, you're doing really good. And just imagine if you had gotten out of Cisco, 10% from the top, you would have been sitting really, really well on that.
Yeah, and here's one other example of a stock that broke out. WMS, which is Advanced Drainage Systems, had a nice base going there. If you look at the daily, all below 117, 1789 or 117.75, and then it broke out, but again, it didn't break out. It never got average daily volume on that, where it went from 109 through 120. And then you had a number of days where it would try to go farther, where it hit 124.98 and reversed and closed on the low, or actually closed down, and just couldn't follow through. And then once that comes back down into the base, that's where you could say, hey, this just didn't make it. I should sell and not wait until it breaks. Well, now I would, now it's getting even worse, that it's breaking the 50-day moving average. So that's where, if you're buying right, technically, it gives you so much easier of a spot to get out. And that's why we keep on saying, if it's extended, where do you get out? I mean, if the stock has already up 7% for the day, it's just, your risk is so much greater than when something has been really tight and you know exactly where to get out quickly.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.